Hey guys, this is Blair with the Taylor team, and I've got Brant Barnes and Ashley here with Shelter Insurance. And today we're going to talk about just some different things having to do with homeowners insurance and in relation to real estate. Okay, so guys, for the first question, how do you pay for your insurance just at closing?
I'll let Ashley expand on this a little bit in a second, but really the main way it works is, you're gonna pick a company, right? You're gonna go out, you're gonna get a couple quotes, and those companies are typically gonna send that over to the closing office. Closing office is gonna look at those. You're gonna make a decision as the homeowner. You have to make a decision of what insurance company you want to go with. Once they do that, they're gonna put that in. That closing office is going to pay us directly. You're not going to pay anything. It's going to usually 98% of the time come from closing. They're going to pay us, and then they're going to say, hey, this insurance premium is $1,200 per year. So your mortgage company is going to start adding $100 a month to your payment until next year, and then your mortgage company is going to pay us. Is there anything that would really expand on that, Ashley?
Right. No, I mean, I think you explained it perfectly.
So the other thing that I want to make clear too is they don't bring a separate check to closing. This is just part of the closing costs, correct?
Yeah. It's all going to come out of closing. Once you sign the paperwork, they're going to cut checks to real estate agents and all those things, and we're just one of those people. We do like them to send the check. We usually ask the title company to send the check directly to our office, not up to like the home office, because they get lost in the shuffle. So we can put it right there, process it. But the homeowner makes the decision on where they get their insurance. The main key is that insurance company works very well with the title company.
Okay,
that's the most important thing.
Gotcha. And so on to the next. So how does keeping your claim record clean impact your insurance? And how does that help you, like, in the buying process?
Two things that an insurance company really looks at on your claims record is severity and frequency. So what they want to know is, if you're having claims, are they large? Is this fires or stuff huge? And then how often are you having a claim? The average homeowner has a claim somewhere between once every 7 to 10 years. That's the average, and the industry is used to that. If you're having claims every 2, 3, 4 years, every year, there's a problem there. You don't want to be frequency, and you don't want to be severity. Severity you can't help if you have a tornado or something happens, but you can help with frequency, and you always got to watch those small claims. Be careful turning in something that's $800 or $1,800.
So just don't,
because even if it's small, they're looking at how many of you had and how often. So, Ashley.
Right. And certain carriers will actually consider you ineligible if you have too many claims.
You just can't get insurance. Okay.
Or you would have a high risk coverage where you've had 3 or 4 claims that just so happen, and instead of charging $1,800, they charge $4,400. And
just don't take your chance. You're going to pay a lot more, or you could become uninsurable too.
Absolutely. And be careful. Like, when you have a claim, go figure out what's wrong. Make sure it's a bigger issue. We have a lot of people call us, turn in a claim. We get out there and realize, hey, it's not as big as we thought. Right. Don't worry about it. Well, that's still a trend. It's still a transaction, and
it's still a trend if that person's calling on everything.
You just want to be careful.
So, and if this always confuses me, John, I've asked about it before, but so what is replacement cost versus the actual cash value?
A lot of people ask this question because it's like a really important thing. Is like, when you have a 12-year-old roof on your house, the insurance company expects your roof to be about 20 to 25 years of life. Right. So if you have a bunch of hail damage and it's really, really, really bad, right? Should the insurance company pay you the full amount to replace it, $10,000, or are they going to pay you what a 12-year-old roof is worth? So they're going to divide 12 years into 20 and say, we're going to give you $4,400. Sometimes there are policies that are actual cash value. They are more reasonable and they'll save you some money. But in time of a loss, you may find out that you have a $3,000 problem, but because it's so old, they may only pay you $1,000. So you want to make sure that the policies are comparable. It's not always a bad thing to take an actual cash value policy, but you just want to make sure that if you're getting 2 quotes, they're kind of apples to apples. Are both of them replacement costs? Are both of them actual cash value?
The only thing I would say with that is that Shelter is a custom company, and regardless of if you have actual cash value or replacement costs, we're still going to pay the entire cost.
Okay, I got you.
So we pay the coverage limit no matter what, if there was a total loss like that. But it's definitely something that you want to know which one you're getting.
So for your average homeowner, when they come to you guys for a quote, like during our closing process, then the average person is probably just going to get full replacement cost, right?
I would say 98 to 99% of the time we're going to write replacement cost on a homeowner if someone's going to live in that house. The only time that comes into play is if people are buying a historic home in the downtown area, it's 1,400 square feet, and they're paying $800,000. I mean, we can't really insure that house to replace that because I can't replace that banister. So sometimes there's no choice but to kind of write an actual cash value policy.
That makes sense.
Because the house is not a standard house.
Right. So why does some insureds opt for a higher deductible versus a lower deductible?
So you see that a lot. I mean, in some ways, insurance is legalized gambling. I say that sometimes. It just really is legalized gambling. And I think that the one thing you want to look at is, if I take $1,000 deductible, what is the premium? If I take a $2,000 deductible, what is the premium?
Right.
A lot of times there's about $200 in savings, to take that higher deductible. Well, if you put that $200 over here, let's just say on a little gift card, and you save it. Well, if you don't have a claim for 9 years, you've got $1,800 over here. You had a claim, you paid the $1,000 extra more in deductible, and you're $800 ahead. A lot of times you'll find yourself coming out ahead in the law of large numbers, the law of time. But if you're not a saver and you're not going to stick that savings in your pocket, when it comes time, you're not going to have the money. So it comes down to someone being disciplined that, understands that they're socking away some money to have those higher deductibles. I definitely believe in higher deductibles. What would you say on that?
Yeah, for me personally, I definitely opt for the higher deductible. I also don't want to be tempted to file a claim for something small.
That makes sense,
I don't need that low deductible. You file too many claims, your insurance score is going to be, outrageously low, and it's going to cause high rates. So.
And that really makes sense. We see that a lot where someone will have a $1,500 deductible instead of $2,500 or $5,000. They'll have a $2,600, $2,400 problem. They're like, I don't want to turn it in because I don't want to claim. And I'm like, well, man, if you're not going to turn in a claim at $2,400, why wouldn't you have a $2,500 deductible? You might as well save the money and not have a claim. So, it just, most of the time, the standard deductible we see today is about $2,500 on a $200 to $250, $500,000 house, and we see $5,000 a lot. Where 10 years ago, $1,000 was more the standard, and I think the insurance companies have really kind of bumped that on up because they're just saying you shouldn't be having claims like that.
That makes sense. And just again, it sounds like know who you are. If you're not going to save the extra, then go ahead and get the lower deductible. If you're looking for the premium savings and you do save, then get the higher one. So,
for sure.
Well, guys, hopefully we've answered your questions around insurance and kind of in relation to real estate and the closing process. Again, if you guys have any other questions, feel free to email us the information below. And obviously, these guys would be more than happy to do a quote if you just need a comparable. So feel free to reach out to us, and we'd love to help you with that. Hope you have a great day.
Thank you.
Bye.